Hello, everybody, and welcome to CNE, CNE Online. I'm Andrew Robinson. I'm the program manager here. There'll be a few more people trickling in, but I'm gonna go ahead and get started. So today we are kicking off the first of 4 virtual town hall meetings that are focused on understanding the financial resources and relief packages available to nonprofits. So as I'm sure you're all aware, as you're here, there's a lot going on in that field and a lot to understand. And so we have a panel here today to help us dig into some of that and understand what's going on there and try to respond to some of your questions and concerns about that. So on the panel today, we have Rahul Keshap, who is a CNE board member and principal at Shuru Law, which provides legal services to nonprofits. He also teaches law at UVA. We have Kadi Davis, who is CNE's senior membership manager and sort of our resident expert on the new legislation that's been rolling out. And then we also have Ryan Jacoby, who is CNE's deputy director of operations and advancement. And because he's sort of in the HR role with our organization, he has some sort of hands-on first-person experience with that. So just before we get started, I wanted to mention a couple of things. You are muted right now and will remain muted for the remainder of this session. If you haven't already, please open up the participants window that should be available in your menu, and also the chat window. The chat window will allow you to connect with other folks who are here, and also to send me questions for the panel along the way. So if you have a question, select the send to Andrew, and I'll pass those questions on to our panel. I'll add some of these things I'm saying here into the chat box now. And then the other piece is, if you haven't already done so, to change your name to your real name, or at least to your organizational name, so that I can see who's here, and so that the folks who are here can know who else is in the room and connect with you if they're interested. I'll have some other resources and things to share as we go along, but I think that I will turn it over to the panel and get things started.
All right. Hi, everyone. I'm Kadi Davis. Want to thank you for joining, and start by saying that if you've been feeling overwhelmed by the information, and there's a lot of it, or having difficulty navigating it, that you are not alone in that, and want to validate it at the forefront, because it's confusing. So our goal for today is to help you cut through it all and share what we've been learning as there's been new information coming out regularly. Another goal is for us to learn from you, so that we can incorporate that information, your experiences, gather what we've missed, and share it with others. So as Andrew said, please share your experiences and send questions using the chat box. We would welcome those. I want to start by sharing the summary memo that we have put together, and just walk through the various sections. It's available on our COVID-19 resource page, and we'll be sending you the link after the town hall. So it's a document that we've been updating regularly. So I'm going to briefly touch on information that you can share with donors, as well as sources of local funding and resources. The majority of our time, though, will be spent on the 2 major loan programs available to nonprofits under the recently passed economic stimulus package, also known as the CARES Act. So those 2 programs are the Paycheck Protection Program and the Economic Injury Disaster Loans. We'll also touch on other relevant provisions in the CARES Act, relevant to nonprofits, of course, as well as the Families First Coronavirus Relief Act, which was passed before the CARES Act. So we'll start with Charlottesville nonprofit funding and resources. So that's this section here. So I know that we have a handful of people outside of the Charlottesville area, and we're working to update this document to include other communities who we work with around Virginia, and we're hoping to do that in the coming days, so stay tuned for that. But as far as local funding in the Charlottesville area, CACF is providing grants to households experiencing hardship and nonprofits providing basic assistance, including food, housing, and medical supplies. So if you are a nonprofit who falls into those categories, you can contact Ebony Bug to discuss your needs. For organizations in Orange, Madison, Culpeper, Fauquier, and Rappahannock counties, there's the Northern Piedmont Community Foundation. If you have emergency relief funds, we urge you to post them to Support Seville. It's a website that's pretty, I think, very comprehensive, and there are a number of nonprofit relief funds currently posted there. We also have access to the foundation directory online. Normally, you can only use it on our offices on site, but they've made it available remotely. So if you're interested in looking for funding from grant makers, you can contact Ian, who's on this call, for access. Let's see. So the next section here is if you're a nonprofit looking for assistance for, or you live in the Charlottesville area and are looking for assistance for your household or clients you serve. And then going back to Support Charlottesville's website, it's a great way to both look for help, including supplies, volunteers, services, money, and to help. So donating those money, supplies, volunteers. And it also, of course, lists the sources of nonprofit emergency relief. CACF is currently prioritizing funding to households experiencing hardship. So those, like nonprofits, are households located in Charlottesville, Albemarle, Buckingham, Fluvanna, Greene, Louisa, Nelson, and Orange. The Community Resources Hotline, you can call them for just assistance navigating different resources in the area. You can also sign up for the Seville Community Cares and Charlottesville Clergy Collective newsletters. I've been receiving those, and I think they have a lot of great information. There's also a Facebook group called Mutual Aid Infrastructure, where people are both asking for assistance and volunteering to help. So there's a lot in that Facebook group, but I think if you follow some of the threads, there's a lot of good advice. And then finally, the Virginia Coalition for Immigrant Rights has collected resources if you work with immigrant communities. So the last section here is if you are working with donors and you want to help advise them on how the CARES Act influences their donations, there's a new above the line deduction for total charitable contributions of up to $300. It applies to contributions made in 2020 and would be claimed on tax forms for next year. Let's see. So at this time, I'm going to turn it over to Rahul to talk about the Paycheck Protection Program, which was the first of the major programs available under the CARES Act to nonprofits.
Yeah, thanks so much, Katie, and good afternoon, everybody. You know, this is an unusual time, that's for sure. So appreciate you all joining us, and you know, it's really an honor for me to serve on the CNE board. So I'll start off with a plug for the CNE, just because you know, the staff at the CNE have been working really nonstop for the last few weeks when this crisis has turned into the global event that it's all become. And you know, I have seen, I guess I won't say firsthand because nothing is firsthand anymore, but I've seen remotely how hard folks at the CNE are working to serve nonprofits and to try to figure out what all of this means from the nonprofit perspective. So, you know, it's really a proud moment for me to be able to see them in action. And I hope if you're already familiar with the CNE, then hopefully you'll be reinforced by that. And if you're just hearing about the CNE for the first time, then I think you're in luck, because this is the right time to be kind of connecting in with those folks. I'm going to cover, as Katie said, the Paycheck Protection Program, which is part of the CARES Act. I'm going to go over this at a high level, and I'm just going to encourage everybody, you know, to try to focus on kind of the forest and not the trees. We're going to do our best to give you a sense of kind of what the Paycheck Protection Program is intended to do. But at the same time, I'm going to say that, you know, everyone is figuring this out together. It feels like, you know, there's a lot of confusion here, and there is. At the same time, the law was literally signed into law on March 27th. And so it's been a week and a half It was a $2 trillion act and bill. And so, understandably, I think a lot of people are scrambling to try to figure out what this means and where it's going to be administered and how. So the Paycheck Protection Program at a very high level is a set aside of $349 billion, billion with a B, that Congress and the president signed into law over the last couple of weeks. And the idea here is, it's exactly what it purports to be, which is to provide paycheck help for businesses that are struggling. Small businesses is the idea, although you can be a decently sized business and still get benefits. But this $349 billion is really intended to try to backstop businesses that need to cover payroll, the idea being that they can essentially get loans from the government for the amount of payroll that it takes to cover about 8 weeks of payroll. And then the good news is that if they are able to meet certain conditions, that loan will actually be forgivable by the government. So the idea being that the government will actually pay your company's paycheck needs for about an 8-week period in the long run. As always, there are going to be details and there are going to be, specifics to pay attention to. So eventually we'll all need to figure that out. But at a high level, just keep that in mind that the Paycheck Protection Program is intended to cover people and cover businesses to make sure that they can essentially hold the line on employment and keep their staff employed over the course of this crisis that we're all going through. The other big thing to keep in mind before we jump into the details is that this is expected to be oversubscribed. $349 billion is quite a lot of money. At the same time, I think there is general acceptance and understanding now that that's not going to be nearly enough to cover all of the demands that are out there and the requests in terms of paycheck protection. And so I know just this afternoon, it sounds like the Washington Post is reporting that they are having some high-level conversations around the possibility of extending and expanding the program. And so perhaps adding another $250 billion. Maybe the takeaway here is that even if you feel like things have already progressed or people have already put in applications, there may still be additional funding under the law. There may be a new law that expands on this, and there will certainly be more details to figure out along the way. So with that said, I'm going to jump in and give you sort of the highlights of what the law is. The good news for nonprofits is that this is specifically available to 501c3 nonprofits. So we're talking there about the charitable organizations that are tax exempt under 501c3 of the Internal Revenue Code. So that is most of what people would typically think of as a nonprofit organization. Although you should keep in mind that if you are a nonprofit organization exempt under 501c6 or 501c4 or one of the other less typical exemptions, those are not eligible to take advantage of the Paycheck Protection Program. So I know there have been some requests, but for now, at least on the nonprofit side, eligibility is restricted to 501c3 organizations. With one exception, a 501c19. I'm not going to spend a lot of time on that, but those are veterans organizations. And so if you happen to be a 501c19, they are also eligible under the Paycheck Protection Program. The idea here is that these loans can be used to cover payroll costs, and that is, pretty broad in terms of salaries, wages, commissions, tips, paid sick leave or medical leave. It's really a pretty broad approach to thinking of what is payroll. So it can be money out the door, but it's also money being spent indirectly on things that will cover employee wages or other compensation. The bulk of the money should be spent on payroll, but it does not have to be every last dollar. And so what I'm seeing from Department of the Treasury regulations and the Small Business Administration regulations are that as long as you spend about 75% of the loan, or at least 75% of the loan on paycheck expenses, then it's going to still be in that forgivable category in terms of being able to qualify for forgiveness by the government. If, on the other hand, it falls short of that, then the loan itself, unless it was taken in bad faith, unless you were essentially lying on the application, it's okay if you use it elsewhere. It just means that essentially the forgiveness portion could go away. The process itself, in terms of applying for the Paycheck Protection Program, is going to be done in conjunction with banks and SBA lenders, that's Small Business Administration lenders. And so that's a lot of what the scramble has been over the last 4 or 5 days, because the initial launch date was supposed to be April 3rd. I know, for example, that Bank of America has already taken in, I think, $38 billion worth of applications. I know that Wells Fargo had set aside a $10 billion amount for applications and has already exceeded that. So most lenders in the country, I think, are scrambling right now, and that includes local lenders as well. So I'm not going to dwell on particular status of various lenders, but one thing is that if you have an existing relationship with a bank, you should value that and try your best to reach out to those folks and understand what process they're going through, because they're all trying to scramble to make sure they understand the experience of helping applicants with the process. It is possible to reach out and make a new connection with a bank, but again, the scramble that's going on right now, I think, leaves you really in better shape if you have a pre-existing relationship. Understandably, that's not always the most fair situation, because some nonprofits and other businesses are not in position to have deep bank relationships. At this time, though, I think if you have one, be glad for that and do your best to kind of reach out to banking contacts that you have. As I said, the original launch date in terms of actually processing loans was April 3rd. And I'd be curious to know if some of you all have experiences with talking to the banks to try to understand, what their process has been, because most banks have been developing essentially a portal or an application process and have been taking their applicants through that. Now I think we're in a little bit of a quiet period trying to understand how all of that, has processed through the system, and how the Paycheck Protection Program loans will actually be processed. So I heard actually anecdotally, and we can talk about this, but supposedly some loans have been made, or at least have been approved. And so, it may be that those loans will start to trickle back through, the system now that they have been applied for fully. So with that said, I think there are a number of details in terms of, what forms you need to think about and how you need to think about preparing, the documentation and so on. Happy to try to answer some of that, but again, at a high level, if you are a nonprofit 501c3 organization with fewer than 500 employees, then you're in good position to consider and really explore applying for a Paycheck Protection Program loan that can later be forgiven by the government if you continue to essentially hold your payroll where it was before the crisis began, and ultimately, have the government pay for your paycheck needs during this period.
Can I pause you for a question, Rahul?
Absolutely.
So a couple of things. One is there's a couple comments around people's experience applying so far. So someone had mentioned that they had filled out an application at UVA Credit Union and received an auto reply, but hadn't actually heard anything back yet, and sort of expected that. And someone else said they had the same experience. And then I had another comment that I think is interesting, is that that their bank, Virginia National Bank, had stopped taking applications for PPP on Friday afternoon, and that she is finding that other banks are only taking requests from their own customers. So she's, I think, asking a broader question of what we can do in terms of advocating with banks on this point to help nonprofits get those applications in.
Yeah, absolutely. I mean, I think that's really what we're hearing, which is that banks are scrambling, and initially, their focus has been on serving their existing customers. And so, if you can imagine that every bank is going to be oversubscribed, and there were a number of kind of pre-existing or pre-approved SBA lenders, but I know that Treasury and the Small Business Administration have essentially been telling every bank and every credit union that if they wish to participate, they can. So good news there, but the problem is that, because this $349 billion has probably been spoken for already, or at least has been applied for, the SBA and the Treasury Department have said that these are going to be available on a first come, first served basis. And so, that really does create the problem there, which is that people have been stampeding to the banks to try to get their applications in. And now I think we're left with trying to think through, of course, the fairness and equity implications of what that all entails, but also, what can we do going forward? And, these are bigger questions, of course, than we can solve, in Charlottesville. But I do believe that at the federal level, they are talking about essentially adding a larger pot of money to the program. No guarantees, of course, until it's signed into law. But at the same time, I think the widespread assumption is that the $349 billion has essentially been oversubscribed.
So Rahul, if I could jump in, this is Rebecca Haydock from the Small Business Development Center in Charlottesville. So the money, actually, there's quite a bit of money available. It's not been oversubscribed. Several of the banks did have caps. Wells Fargo's was for various reasons. There are several banks and places that are taking loans. Many of them are requiring that you open an account with that bank. And I did want to respond to one of the things in the group chat. Payroll tax is included, federal, state, and local taxes. And if you guys need, I can give you very specifics on exactly what's covered under payroll.
Yeah, Rahul, can I jump in as far as advocating for nonprofits broadly? I saw a letter going around from Independent Sector, which advocates for nonprofits on the national level. And they're asking nonprofits to sign on, to ask banks to prioritize nonprofits. So we signed on to that today and shared it on our social media. Yes.
Thank you for that, Katie, and thank you, Rebecca, as well. Obviously, Rebecca in her role, and I'm going to get it slightly wrong, but it's the Small Business Development Center here in Charlottesville, right?
Correct.
So thank you, Rebecca. She's another fantastic resource for really kind of sorting out, what the open questions are, and because it's essentially a moving target. I think this is going to continue to develop as banks pass back more information to the government, and as the government continues to finalize their rulemaking. At the same time, I think our continued advice for nonprofits who are trying to navigate this is that if they expect and have a good faith belief that they are going to be putting payroll at risk, and if they are looking for ways to try to maintain that payroll, then the Paycheck Protection Program is an excellent way for them to reach out and seek government assistance through this forgivable loan. So Katie, I think I'll turn it back to you to talk through the other big portion of the CARES Act, the EIDL loans and grants. We can, of course, field other questions as they come through the chat as well.
Yeah, I think I see a question from Megan about special conditions to have the PPP loan turned into a grant. Rahul, I know you mentioned that you have to spend at least 75% on payroll. Some of the other conditions, and I know Rahul, you touched on these, you can have a reduction of greater than 25% in wages, and you can't reduce the number of employees. And if you do, you would need to rehire by June 30th. And so if you've let someone go post February 15th, is my understanding is the starting date, that you would need to rehire them by June 30th to have the loans forgiven. So those are some of the kind of big picture conditions. And it's my understanding that it includes both full-time and part-time employees, but not independent contractors, which I think I saw a question about independent contractors in the chat.
Yeah, Katie, just to add to that, you're absolutely right that for businesses that are looking to get benefits from the Paycheck Protection Program, they need to be thinking in terms of their full-time employees, or as you said, their part-time employees. But the employment question is the key one. They may have independent contractors, but the idea is that those folks who are independent contractors would be able to apply separately for coverage under the Paycheck Protection Program as well. And so I think that's why the government is really guiding people to say focus on employed staff, and independent contractors will be able to submit a separate application for coverage under the Act.
Would you like me to roll through what's included in payroll? I see there's a question there to give detail. Do you guys want detail on that?
Sure. Yeah, go ahead, Rebecca. Thank you.
Thanks.
Okay, so payroll costs, and this is according to the SBA, so this is absolutely correct. There's a lot of false information out there, so just want to make sure you're all clear. It includes salary, wages, commissions, and commissions are from net earnings. Tips, it can include cash tips if they've been recorded. Also, vacation and sick leave, healthcare, the insurance premiums, state, local, and federal taxes. Okay?
Thank you so much.
Sure.
And I saw a question too about whether you need to hire back the same employees. It's my understanding that you need to hire
No.
back for the position, but it doesn't need to be the same person.
Correct.
Mhm. The other thing I wanted to add as far as finding potential lenders to go through, I did have an email from MoneyWise Payroll. They mentioned if we have members, and I think nonprofits more broadly who are using MoneyWise Payroll, that Blue Ridge Bank said they would be happy to work with those using MoneyWise. We've also heard that people using QuickBooks Intuit for payroll, that you can access the loan through QuickBooks. So that's something that just came through yesterday.
So I have a list of banks. Some of them, of course, require, I mean, there's many in Virginia, and there's a list online about the banks that are lending. Of course, I think you're all familiar with some that have closed, but the latest list that I have, some of which require you to have an account there, but it could be as simple as opening a savings account, are United Bank, Blue Ridge Bank, Virginia National, and Farmers and Merchant. I'm sure there are more. This is not an exhaustive list. This is just the banks that I've had conversations about today.
Thanks so much, Rebecca.
Yeah, and Bank of America is apparently also still active.
I did have one more question. So I think what you were saying is that the conditions around getting that loan turned into a grant have to do with keeping staff on. And I was just wondering if there's other special conditions, if there's anything else beyond that 75% threshold that was at play there.
Yeah, so to speak to it broadly, I mean, they really do relate to essentially preserving your payroll and preserving your employment. And so, as Katie had said, the idea is that you should not let go staff, or if you have, you should hire them back. And then the other parts of it relate to the amount that you're spending on payroll, making sure that the amount spent stays at least at that 75% level compared to prior measurement periods from last year. And then beyond that, you need to be spending the loan proceeds on payroll expenses, again at that 75% level. So the spirit of the Act is really all around the idea of preserving payroll and preserving employees. And so, the requirements in terms of the loan's ability to be forgiven by the federal government really do relate to those same elements of it. Again, there will be details in this, and so we need to make sure we pay attention to those details as the loans are dispersed. But those are the broad requirements.
Thanks, Rahul. And I do want to move on to hear about the economic injury disaster loans. Please, if you have questions about the PPP, keep adding those in. If we don't have time to get to them in here, we will include follow-up to everybody about unanswered questions. And just before I hand it back to Katie, I'm going to send out a quick poll for everybody just to give us an idea of whether or not you had heard of these things, the Paycheck Protection Program, the economic injury disaster loans before this town hall, and then to get a sense of who's already applied or tried to apply. I've added a second question about that. So I'm going to launch that poll and just give you 30 seconds or so to put in a response.
maybe while the poll is ongoing, I will just remind people again that the memo that the CNE has put together that Katie is showing people on their website, it's an absolutely, fantastic resource in terms of walking you through all of, the discussion we're going to be having on the webinar today, and really just sharing with you kind of what the resources are in town. So make sure you do go to the CNE website and access that memo, because it's impossible to try to keep track of everything that we're talking about, and yet the memo really does a nice job of capturing that and adding links. So do make that a stop on your way as you leave the webinar.
We got about half of the folks who answered the poll, and it looks like a lot of people knew about these programs coming in. About half had applied to the Paycheck Protection Program already, but only 2 of the respondents had applied to the economic injury disasters loans. So I'll take a look at that.
Great, thanks. And Andrew, would you mind just capturing the questions we weren't able to answer yet about the Paycheck Protection Program so we can circle back to them? I saw one about the board resolution and what's required, what time frame they're looking at to calculate payroll, and whether salaries, if you reduce them, need to be put back in place.
Yeah, I'll keep track of those as we go on.
Okay,
Thanks, Katie.
great. Thank you. All right, so moving on to the economic injury disaster loans and emergency grants. This is kind of the other major loan provision provided for under the SBA. So I'm going to use the economic injury disaster loans. I'm going to use the acronym EIDL to refer to those. So the CARES Act put more money into the EIDL program, which already existed. So for, say, Hurricane Katrina, there were organizations who could access this disaster funding. But the CARES Act expands eligibility for the loans and waives certain requirements that previously existed. So unlike the, I'm going to call it the PPP, the Paycheck Protection Program, the EIDL loans are available to all 501c3, or I'm sorry, all 501c's, D's, or E organizations in operation prior to January 31st of this year. When these first rolled out, there were questions around, do I need to call the SBA to find out if I'm eligible? If you're a nonprofit, you're eligible, so you don't need to call them and determine that. The EIDL, as compared to the PPP, can be used for kind of a broader array of expenses. So it can be used for payroll, sick leave, fixed debts, accounts payable, rent or mortgage payments, and other bills that can't be paid because of the disaster's impact. So the loan terms and amounts are determined on a case-by-case basis, with loans of up to $2 million and a 30-year maturity. For nonprofits, the interest rate is 2.75%. And a key part of the EIDL program is that there's funding for emergency grants, so up to $10,000. So when you're applying for the EIDL, you can ask to be considered for the $10,000 grant that does not have to be paid back, even if your application is denied. So that's a very key part to note. So if you applied for an EIDL loan before the $10,000 emergency grants were announced, you can go back, and I think only 2% of people had applied, so this wouldn't apply to many. So you could go back to ask for it. But when you are applying for an EIDL grant, there's a section where you check the box and say, yes, I'd like to be considered for the $10,000 grant. So some of the key steps to apply, unlike the PPP, you don't go through a lender, you go through the SBA website. As of about maybe a week or two ago, the application process and using the website was pretty onerous and people were having trouble. A more streamlined application and website has been built. So some of the things you would need to apply, I know there's a question about a board resolution for the PPP. With the PPP, lenders want to make sure that you have corporate authority on behalf of the board to take on a loan. Similarly with the EIDL, you would want board approval to, or follow your board process to make sure that you have authority to take on this loan, and unlike the PPP, this is a loan that must be paid back. So some of the things you would need to gather to apply include a statement of activities, the date that your nonprofit was established, your bank account numbers, and the EIN. You can apply by mail, but the SBA really encourages going through their website. And like the PPP, time is of the essence with this one as well. And I'm going to, let me see. Andrew, are there any questions about the EIDL before I kind of go into comparing the PPP and the EIDL kind of strategies?
There's one question about being able to apply for both, if that's a possibility. And then the other question is whether nonprofits can apply only for the $10,000 grant portion.
So can I just jump in really quick just to clarify on language? It's not a grant, it's an advance on the loan that might be forgiven. So just want to make sure that, that's clear. The SBA is getting a little sticky about that language.
Thank you.
Mm-hmm.
Right. And it's my understanding that you can't apply just for the advance grant, an advance that doesn't have to be paid back. It's my understanding you can't apply just for it, that it's part of the EIDL application process.
Right. You're applying for the whole loan. You can do the, you know, what they're calling the short application, but the intention is to do the longer application. And for people that are looking, I don't know if you have all those forms, do you have them on the document that you're referring to? We also have those on our website. It's the CV SBDC where you can print them out, because if you are going to actually apply for the EIDL loan, you've got to have all of those documents done correctly.
All right, thank you. Let's see here. And as far as, so, and when you apply for the EIDL and ask for the advance, the $10,000 advance grant that doesn't have to be paid back, you can always choose not to take on the EIDL loan later. And even if your loan application is denied, you can still be eligible for the $10,000. So kind of you can apply for both the EIDL and the emergency grant and the PPP, but you can't double dip. So meaning you can't use both the EIDL funds and the PPP for the same expense. One consideration is the EIDL can be used to cover a range of expenses. Another question that we've been hearing from nonprofits is can we apply for these if we have an operating fund or an operating reserve? It's our understanding that you can. You'll need to have a good faith certification that you've suffered. The language is substantial economic injury under the EIDL or economic uncertainty under the PPP, and most nonprofits have, but it requires that good faith certification. So if you're planning to keep and retain and pay your staff, the PPP seems to be the better option, because if you meet the conditions, the loan will be forgiven and turned into a grant, as opposed to the EIDL, which is not free money and must be paid back. The PPP, even as a loan rather than a grant, has an interest rate of 1% compared to EIDLs of 2.75%. But as far as we can tell, there doesn't seem to be a downside or reason not to apply for an EIDL and request the $10,000 as part of the process. And again, you have the option to decline the EIDL later. Kind of a key thing there is if you receive a PPP or refinance a portion of your EIDL into a PPP, any amount received from the emergency grant is subtracted from the forgivable amount of the PPP. I know that's a lot of EIDL PPP jargon, but that's kind of what we've seen so far as the comparison between them.
There was a question, I think, related to that somewhat, Katie. In relation to the PPP, someone asked, is it true that only 75% of the loan will be forgiven?
If this is Rahul, if that question relates to the Paycheck Protection Program, no, the idea around the forgiveness is to potentially forgive 100% of it, so long as you meet some of those thresholds that we talked about that relate to the 75%, which is using 75% of the proceeds for paycheck expenses and not reducing your salaries and payroll by down below that 75% level. So I understand where the 75% is coming from, but the potential for loan forgiveness is 100%.
Thanks. Oh, there's another question. What's the term of the EIDL, Katie?
I'm sorry, my internet briefly cut out. Would
Or anyone
you
else?
mind restating that?
Term of the EIDL?
I'm sorry, Andrew, one more time.
What's the term of the EIDL? How long is the loan good for?
And it has a 30-year maturity with loans of up to $2 million, and loan terms and amounts are determined on a case-by-case basis.
But that loan is also 100%, it can be prepaid with no penalties. So, and one thing, if you guys don't mind, I'd like to mention, there's a lot of attention and excitement around the PPP, but the EIDL loan is actually it's an excellent loan, right? Because you can take it out, you can prepay it at any time. It can be for much larger amounts and longer terms for your business. So, it is something that we're recommending people take a look at, because there is a portion of that as well that might be forgiven. We're not clear on what that is or how much that will be yet, but it's something that can work for long-term working capital. And if a company decides that, 6 months, 18 months down the road that you don't really want or need that money, you can return it, and that's it. No penalties.
And I see a question about whether the first 10,000 of the EIDL is forgiven and affect a grant. It's my understanding if you receive the 10,000 advance, that you don't need to pay that back.
So there is no real 10,000 advance, right? The way that works is that for the it's based on your number of employees. So for example, if you have 10 or more employees, then it's likely you will receive the 10,000 and it will be forgiven. If you have fewer than 10 employees, it will not likely be $10,000. I just want to make sure you're all clear on that.
And Rebecca, I'm getting several requests for you to pass on the information that you have. If you don't mind sharing that in the chat, we'd greatly appreciate it.
Which information is that?
I think pretty much everything you've mentioned, but you've mentioned specifically stuff around the PPP and the idea of what counts as payroll. That was a popular request.
Oh, yes. I will type that up because I don't have that typed up somewhere. So yeah, I'll put that in there. As far as if you all are looking for the documents and the links, really the best place to get it is off of our website. It's right on the front page. Okay. It's CV for Central Virginia, SBDC. And there's a left button that shows compares all of the programs, including the SBA bridge loan and the debt forgiveness. The middle button gives you the links, including tips. It's a lot of what you've already gotten from Katie, but it's another place to just go download and those forms. If you don't have the EIDL forms, we do highly recommend that people download them and print them before you make your application if you think you're going to want to accept a potential bank loan.
Thanks. And I'll share that link
okay.
here with you all in a second.
Katie, did you want me to pick up with some of the other, the Families First Coronavirus Response Act, or was there another part of this you wanted to touch on before we do that?
No, I think now is great. Thanks, Rahul.
Yeah, absolutely. So, something that was passed into law, gosh, it feels like now about 3 or 4 weeks ago, was really just as the coronavirus response was beginning in earnest more broadly, and that is called the FFCRA, so Families First Coronavirus Response Act. The idea here is really focused on employees at companies of fewer than 500 employees. So obviously that's the vast majority of companies in America. This essentially created a new employee set of rights in terms of emergency paid sick leave. Up till now, there has been no guaranteed paid sick leave here in the US. And this really creates, really just for the remainder of 2020. So this is not a permanent change, but it's for the remainder of 2020 in order to try to help employees make their way through their response to the coronavirus outbreak. So it's created essentially 2 weeks of emergency paid sick leave that employees can access as a matter of federal law and rights. And so the way that they can do that is in terms of 80 hours of paid sick time for full-time employees, or whatever the equivalent is if you're a part-time employee. You can also use the paid sick time to either take care of yourself if you are sick, or you can use it to take care of a child or family member if there are impacts on you in terms of a child care center closing, which is happening everywhere these days. The amounts that are being guaranteed under the paid sick leave are a little different. So if the sick leave is being taken because of your own need, because you're feeling sick or because you're unable to work, the coverage amount is $511 per day. That's 511. And then if you are taking the sick leave in order to care for somebody else, it's essentially capped at 2/3 of your daily wages at a maximum of $200 per day. So obviously a lot of details in here, but just wanted you to understand that employers are required to pay you this sick leave as an employee, but then as an employer, what you get to do is you can actually deduct those expenses from your payroll taxation as you pay it to the government. So ultimately, the idea is that the government is covering this employee sick leave that's been created up to 2 weeks per employee for the remainder of 2020. All of these protections go away at the end of 2020 unless they are extended by a new law that has not been passed. The other part of this is an expansion to the FMLA, the Family and Medical Leave Act. Essentially, the idea being that the 12 weeks of time off that can be taken can actually be covered with pay under this new expansion. Again, it's only for 2020, but if there are employees who are having to take time off in order to either care for family members or care for themselves in the process of this, it does not relate to working remotely. So if you're able to work remotely, like many of us are, then there's no reason to take advantage of this. It's only if you're in a position where you cannot continue to work either remotely or in person, but you can then basically take advantage of up to 12 weeks of job protected leave in order to take care of what you need to do. And it's also subject to compensation in terms of $2,000 a week. Excuse me, I'm going to get the numbers wrong, but it's up to 12 weeks or $12,000 of coverage. So again, the details there are worth looking at. If you're an employer, there is a Department of Labor poster that you need to make sure you share either in person or more likely these days electronically with your employees. That makes sure that those employees are notified of their new rights under these two new categories for the rest of 2020. I think it's in the memo that the CNE has put together, but if you need the link for that Department of Labor poster to share with your employees, feel free to reach out and you can find that online, but we'll certainly send you the link as well.
That's good. And Rahul, kind of circling back to some of the other provisions under the CARES Act that apply to nonprofits, their workers, potentially their clients. Kind of a big one there is around delaying employer payroll taxes for the 2020 year. And the CARES Act also creates a payroll tax credit of up to $5,000 for each employee on the payroll. To be eligible, nonprofits must have experienced a drop in revenue of at least 50% in the first quarter of 2020 compared to 2019. But a key thing here is that the option to delay those taxes or any payroll tax credits don't apply to nonprofits receiving the PPP. So that kind of goes to that no double dipping. A few other key provisions in the Act are the unemployment insurance program. It's been expanded to call the pandemic unemployment assistance. So workers who are not eligible under a standard state unemployment insurance claim can be eligible, including gig economy, 1099 contract workers, temporary workers can be eligible for those benefits. The Virginia Unemployment Commission is waiting for more guidance from the Department of Labor on how to implement. So we'll be updating the memo as we find out more there. The Act also includes funding for government programs, including Head Start, SNAP, aging and disability services. So that could apply to a number of nonprofits, and we have a link to that fuller list in the summary. And the Act also provides for direct payments to individuals, of course. So that's being expected to begin around April 20th, I believe, but might be delayed.
I have a question here in relation to, I think, the Family First Act, if I read it correctly. The question is, if we're a healthcare facility, 501c3 with less than 50 employees, are we exempt from providing the 12 weeks off for childcare?
That's a good question. The less than 50 employees, I'm not sure. Typically, any employer with fewer than 500 employees will be covered, although there is the potential to be exempted from the law if for some reason the law would essentially threaten the viability of your business. But I'm going to have to plead ignorance on that specific question about a healthcare organization. I'd have to check, and I can find out and follow up if Andrew, if you can connect me with the person who's asking it.
And Rahul, I'm seeing in our summary memo that employers of healthcare providers or emergency responders may elect to exclude employees from eligibility for leave.
There you go. Okay, that sounds like your answer then. Thank you, Katie.
Yeah.
Thanks. I want to give folks a chance to type in any other questions they might have. And there's a few that we didn't get to in this session, and we'll try our best to follow up with folks individually or to include that in the overall follow-up that we send out. I wanted to just see if any of our panelists had any final closing comments before we closed out.
Andrew, it looks like we still have a few more minutes, so I might just circle back if it's okay to some of the questions that came up.
Sure.
From before. I think with the PPP, Anne had asked about for the application what you need from your board as far as a board resolution. We would encourage reaching out to your bank to see what they'll need. We know you would need to follow your own board process for taking on a loan, that some banks have asked for some kind of proof that the applicant has the corporate authority to take on the loan. So that's one where we encourage reaching out to your bank to see what they require. I think there was also the question about if you've already done a salary reduction, can you still be eligible for having the loan forgiven? It's my understanding so one of the conditions that must be met is there's not a reduction of greater than 25% in wages. It's my understanding that if you kind of go back to what the salary was prior to June 30th, that you'll be eligible for forgiveness. Rahul, is that your understanding?
I believe so as well, Katie, that essentially there's a bit of kind of a grace period either to hire back employees if you laid them off, or to restore salary levels if you made those reductions. So certainly worth exploring further, but at the same time, I think that is the idea. Exactly.
That is correct. You're
Yeah.
both correct.
And I also saw a question about whether it's worth applying through multiple banks. I received this question from a few other nonprofits. It's my understanding that it would be best to go through one bank and not to apply through multiple.
So we have people that are applying to multiple, but that's of course difficult, right? Because you've got more paperwork. And given that, I don't know about the rest of you, but I've got whiplash in looking at, which bank is on, which is off. Are they taking, regular clients? Are they taking new clients? And it's changing literally by the hour. So if you feel compelled to apply to more than one, you absolutely can. Then you just decide which one you want to get the loan from. And it's kind of a nice way to go because you might get better terms from one than another. But it is more paperwork, of course.
And I'm seeing this comment from Robin that you all went to multiple banks, and thank goodness we did because our bank didn't accept us, but a new bank did.
Congratulations. That's great.
I think I want to ask one more question that just came up because I think it's pertinent. Probably everyone's asking something similar. Anna from CIC is asking, could we have some advice on what the very first thing we should do is? Go to the bank, file for EIDL, local funds, talk to our board. Anything on that?
Well, this is Rahul. My advice would still be to try to explore the Paycheck Protection Program as kind of a first step. And that involves, I think, really reaching out to your bank contacts to try to understand whether they're accepting applications and where they are in the process. Beyond that, I think they should absolutely look into the EIDL loan and grant process, and they should look at, some of the other options out there that we haven't really had much time to touch on in terms of foundations and other programs. I know here in Virginia, it's not oriented at nonprofits, but there are new organizations cropping up that are offering support and resources for businesses as they are kind of negotiating and navigating this. So, paycheck protection seems to be a great first step, and also one that is quite busy and active right now. So that might be a good place to start in terms of reaching out to a bank.
Great. Thanks a lot. I'm going to send out just a few resources from our website into the chat, as well as an evaluation form, if you don't mind. If you're interested in giving us feedback, if you have questions you didn't get to, if you have other topics that you'd like to cover in these kinds of sessions, please add that in there. Thanks to Rebecca for joining us. We'll follow up with some information from her. We're going to have this session sort of repeat, probably with new information as things develop next week at the same time. So if you have burning questions, feel free to join us again. And thanks to our panelists, Rahul and Katie. And thanks everyone for joining us, and have a great day.
Thanks everyone. Stay safe out there.